Imagine waking up one morning and before Wall Street even opens, millions of dollars have already moved across the stock market, not because of human decisions, but because artificial intelligence read the news faster than any trader ever could. This isn't science fiction. This is happening right now. Every single day in the United States, over 5,000 financial news articles are published. Add to that earnings reports, Federal Reserve statements, inflation data, social media reactions, political headlines, and global economic events. For a human trader, processing even a fraction of this information is impossible. But for AI, this is just another data stream. Artificial intelligence doesn't read the news like humans do. It doesn't get emotional. It doesn't panic. It doesn't speculate based on fear or hype. Instead, AI breaks news down into pure data. When a headline appears, for example, Federal Reserve signals possible rate cut in 2026, a human trader might interpret this emotionally, guessing what could happen next. AI, on the other hand, instantly analyzes thousands of similar past headlines, compares market reactions, measures sentiment, volatility, sector impact, and historical outcomes, all within milliseconds. This process is called natural language processing, or NLP. It allows AI to understand human language, context, tone, and meaning. AI doesn't just see words, it sees patterns. When a company like Apple releases earnings, AI doesn't just look at whether profits went up or down. It analyzes every sentence in the earnings call transcript. It detects confidence in executive voices. It identifies hesitation, optimism, risk signals, and future guidance, things that human traders often miss. Even more powerful is sentiment analysis. AI scans news articles, tweets, Reddit threads, financial blogs, and analyst reports. It assigns emotional scores to words like strong, weak, uncertain, record-breaking, or warning. Based on this sentiment, AI predicts how the market is likely to react, not in theory, but based on historical data. For example, if negative sentiment around a tech stock spikes suddenly across multiple platforms, AI can anticipate selling pressure before the price actually drops. This is why many hedge funds and Wall Street firms rely heavily on AI-driven trading systems. In fact, it estimated that over 70% of all trades in U.S. stock markets today are influenced by algorithms and AI systems. That means when you buy or sell a stock, there is a high chance you're recompeting against machines that process information thousands of times faster than you. AI also tracks macroeconomic news, inflation reports, job data, GDP growth, oil prices, global conflicts. AI connects all of it. When unemployment data beats expectations, AI doesn't just react to the headline. It evaluates how similar reports affected interest rates, bond yields, and equity markets over the past 20 years. This is something no human brain can replicate. But here's where it gets even more interesting. AI doesn't just react to news, it predicts how humans will react to news. Markets don't move on facts alone, they move on perception. AI models are trained on decades of investor behavior. They understand panic selling, FOMO buying, overreactions, and market corrections. So when breaking news hits, AI estimates how retail traders and institutional investors are likely to behave next. That's why you often see stocks move sharply within seconds of major announcements long before human traders can even open the article. Now pause for a moment. If this kind of insight fascinates you, how AI is reshaping finance, Wall Street, and investing, make sure to subscribe to this channel right now. We break down complex financial and AI topics in simple language, specifically for the US market, so you can stay ahead in this rapidly changing world. Now let's talk about something most people don't realize. AI doesn't always need accurate news to move markets. Sometimes it reacts to how fast news spreads. When a headline goes viral, AI detects abnormal engagement spikes. Even if the news turns out to be exaggerated or false, AI may already have placed trades based on early momentum signals. This creates short-term volatility, and savvy traders who understand AI behavior can benefit from it. However, AI is not perfect. AI models depend on data quality. If news is misleading, biased, or manipulated, AI can misinterpret signals. This is why flash crashes and sudden market reversals still happen. There have been real cases where AI-driven trading amplified market panic instead of calming it. For example, during sudden geopolitical events or unexpected Fed comments. Algorithms may trigger massive sell-offs faster than humans can intervene. This is why regulators in the United States closely monitor algorithmic trading. The SEC has implemented safeguards like circuit breakers to prevent AI-driven market crashes from spiraling out of control. But despite the risks, AI continues to evolve. Today's advanced models combine news analysis with technical indicators, price action, volume data, and options flow. They don't rely on one signal, they cross-check everything. This hybrid approach is what gives AI such a massive advantage. Retail traders are now gaining access to similar tools. AI-powered platforms can summarize market news, highlight key risks, detect sentiment shifts, and even suggest trades, something that was once exclusive to hedge funds. But here's the key difference. AI is a tool, not a guarantee. Successful traders don't blindly follow AI signals. They use AI to enhance decision-making, not replace it. The future of trading isn't AI versus humans. It's AI plus humans. Those who learn how AI reads the market will have a serious edge. Those who ignore it risk falling behind. Because whether we like it or not, Wall Street is no longer just driven by people in suits. It's driven by code, data, and algorithms reading the news faster than the human eye ever could. And this shift has already changed the stock market forever. If you want more deep insights into AI finance and how the US stock market is evolving, don't forget to like, subscribe, and turn on notifications. Because the future of investing isn't coming. It's already here.